Alright guys, welcome back to the channel. In today's video, we're going to be speaking about long-term trading, which is also known as swing trading, versus short-term trading, which is also known as scalping. Now, don't get me wrong, they are both very profitable, both profitable. But now, it depends on what you want to do. So now, long-term trading, as we can see, you place the trade, you go about your life. Yeah, you just let the trade manifest to what it has to be. Now, short-term trading, you got to kind of babysit that. Yeah, you got to kind of sit by the chart, see what it's doing. Yeah, and proper make sure that it's not going against you or whatever. Don't get me wrong, in both styles of trading, you can set your limit order, or you could set a stop loss, take profit. You can do all that. But me personally, if I was scalping or short-term trading, I'm watching that. I'm babysitting that trade, because I know it might go all the way close to your stop and not stop out, or it might go all the way the other direction and not stop out. Sorry. So short-term trading, I'm babysitting it. Long-term trading, I'm away from the market. I'm away from the computer, sorry. Yeah? But don't worry, we'll go over that in the video today. Alright guys, in today's video, we're going to be going over long-term trading, which is swing trading, versus short-term trading. Now, I don't want to make this video too long, just quickly, briefly. So, long-term trading. Obviously, long-term trading is looking at the higher time frames, daily, weekly, monthly. That's where you look if you're a long-time swing-term trader. So, as we can see, very simple setup here. We can see the market come to this point here. Yeah, see, in line with this our support level here. So as it's come to here, we get into the trade. Anywhere around this, we get in and we ride it up. We ride the trade up. Let's see how many pips. We're talking 800 pips, yeah? Well, a bit further, I'll probably be about 900 if you go further up now. Now, that's a long-term setup, long-term trade. Because remember, we're holding this trade from, say, end of December. Even if we got out at the top here, we're talking, say, end of March. This section here, end of March, yeah? So we're talking 3 months holding the trade. And remember, it has a little turbulence. It goes down, goes up, goes down. Well, this is a pullback. Pullback, up, pullback, up, small pullback, up, pullback, up. Then it topped straight out. Yeah? So we're looking at 3 months long-term trading, but say 800 pips or so. Alright, now let's look at a smaller time frame. So let's look at the 15-minute, smaller time frame. Now, similar setup, yeah? As from what I just showed you. You can see this is a support level. Let's see where it's touched before. We don't have to go that too far back. Okay. Support to resistance. This has been resistance level. Now, as we can see, support level is not too far off this region here. Yeah. And we'll take that. As we can see, because the 15-minute, it moves a lot quicker in terms of the data comes out a lot every 15 minutes, a new candle open. So as you can see, there's a lot of wick movement here. When we say wick movement, we mean all these spikes, these spikes going down, as we call wicks. So a wick movement. So as we can see, it was difficult breaking this so-called level, yeah, this support. So we get in on a buy, which we're going long. Now let's see how much pips we could gain.
Okay, this level here is 51. This is 70, say 75. This level is around 99, say 100 pips. And the last level is 120 pips. Yeah, over a matter of, say, a day and a half. Yeah, a day and a half, you could have gained 120 pips if you kept in the market, that is. Now that's a short-term trade, because the market had a lot of up and downs. Although it didn't break the next support level, it didn't break this level, respected this level all the way. Yeah, because once it broke through it, it respected it all the way, and it went up. But now the difference I'm trying to get to, the long term and short term. In the short term, you're potentially, in this trade, could have gained 120 pips or so. Now in the long term trade, without babysitting it, you're looking at over 800 pips, but you're just watching it probably day to day or once a day, or whatever you feel you need to watch it, you'll watch it. But with this type of trade, I believe you need to watch it a lot more. So it's a lot more work because you're more watching it, you know. So you want to kind of reduce your workload, but then if you enjoy watching it, there's nothing wrong with that, because 120 pips is 120 pips. Same with 800 pips is 800 pips. It doesn't matter. It's all, you're all making currency from gaining pips, so it doesn't really matter. So my bias on long-term and short-term trading is down to preference. If you want to trade short-term, then it's perfectly fine. There's nothing wrong with it. But if you want to trade long-term, you know the longevity of you could gain more pips. With short-term, you're in and out the market, in and out, in and out, in and out, in and out. A day and a half, you're out, gone. Take your 120 pips or whatever pips you gain, done. So I believe long-term has its benefits, and short-term has also a lot of benefits. And to be honest, it depends on how much time you want to be in front of the chart, to be honest, or in the market, in terms of analyzing, watching, knowing what the market's doing, market behavior. So yeah, well guys, thanks for watching this video. Please subscribe to the channel if you haven't subscribed. Please hit that like button, and I'll see you in the next video.